Hey everybody, welcome to another video. My name is Infiniti Whitley and I am a life insurance broker in the states of Missouri and Michigan. Today I'm going to talk to you guys a little bit more about stuff on the consumer side, and that is going to be about how you can save on insurance costs, right? So a lot of times when it comes to soliciting life insurance, there comes a case of hindsight is 2020, and if you're watching this right now, my favorite thing to tell people is that you're never any younger or any healthier than you are right now in this moment, this very second. Because life can come at you every which way in a matter of minutes, a matter of hours, etc., etc., right? And that's kind of an existential way to think about life, but as it pertains to life insurance, that's just how it goes. So being that you are never any healthier or any younger than you are at this moment, there are some exceptions, don't come at me. Taking that into mind, you want to obviously get insured sooner rather than later. So on average, insurance costs for individuals go up about 8 to 12% per year that they wait. So that obviously isn't great for your wallet, especially in this economy. Who are we kidding, right? So when I'm talking to clients, it's always my mission to get them to sit with me, not just because I get paid when they get signed up for life insurance, but because if it's coverage that they're really sounding like they need, but they don't really know if they want to do it right this moment, then it pays to, no pun intended, paint a picture for them. Like for instance, last year I had a client and they were, almost mid 50s or something, and their premium was about $69 a month. Well, they had a birthday at the beginning of the year, and every time I would make contact with them, call them back and be like, hey, and kind of check in, they're like, oh, we'll do it later. We'll do it later. I'll do it later. And my client already had a couple of health issues that weren't bad, but again, things can change, and my job is to insulate people against those life changes. So one of the perks to getting life insurance when you're young, again, other than the health and the age, right, is that when you get that premium, it's locked in for the term of the policy. So, and whether it's whole life or term life. So in the case of term life insurance, if you have a 30-year term policy, that means you are locked in for that rate and that amount of coverage for that 30 years. So if you get a policy that is 150 grand, right? And you're in that for 30 years and you're paying maybe $45 a month for it. That means for the next 30 years, that's your rate. You don't pay any more or any less than $45. Now, when it comes to whole life, it's the same thing. So way back when I took out my first policy, it was like $33 or something a month for a whole life policy. Mind you, I was in my younger 20s, so I mean, I kind of expected it because whole life policies are slightly more expensive than term life policies, but whole life policies are kind of set and forget. As long as you got your premiums on auto pay or you got some kind of premium loan option selected, then you don't have to worry about whether or not you have final expense coverage later on, because you set it up and you pay for it. So again, for example, if you are like 50, let's say you're like 52, 53, and you sign up for a term policy and it is $69 a month right now. Say your birthday comes up beginning, middle of the year, and it comes and it passes, and then you're like, hey, dang, I finally remembered that insurance that I was really interested in. Let me come back around and try to sign up for it. What you're gonna find, if you're with an honest agent, you're not going to get a quote that was lower than that initial quote. So in my case, with a specific carrier that I have, with that scenario set up, the premium jumped from $69 a month to $75 a month. And some people might be like, oh, that's not really that much. But if you're, an adult and you're used to paying bills, you know that like every dollar per month counts on things. And you want to be able to set yourself up for the lowest price point possible. And so to add to what you can do, things that are easily changeable that you can do to save on life insurance at any point. This is a big one. If you vape, if you smoke, if you use recreational stuff, maybe cut that out. Okay, just being real, because a lot of times what I have found when I write for people is that if you are, say you're young and you're healthy, or if you're young and you're healthy and you have no health issues but you smoke, your rate can be 1.5 to 2 times more than a non-smoker because of the associated risks that come with vaping, smoking, or recreational stuff. And so that's why you get asked that if you're in an appointment with a life insurance broker. And even still, some carriers, they do incentivize you to quit by, if you quit within a certain amount of time, they will lower your premium, and that'll be your new fixed premium, that kind of thing. But really, if you're thinking about life insurance, you might consider quitting. Some people do, some people don't. I've had a mixture of both. It's up to you, but it's something you want to keep in mind. Now you might ask yourself, why is life insurance cheaper for younger people? Well, that's because generally younger people are healthier, and because life insurance companies assess people based on what we call risk, they consider younger, healthier people to be at a lower risk to insure than maybe someone who is older and has a few health problems that have come with their older age. And this comes especially with term life insurance. And a lot of people will get kind of flustered if they don't understand insurance and they think that they're being discriminated against because of their age. But that is not the case. I swear, everything is run off of statistics and numbers. These places have actuaries that work on these numbers and are able to come down to some really specific numbers and statistics based on age groups of people within the country. So that's how they come up with their risk class and how they associate premiums with risks. It's all numbers. I hope these tips today were helpful for you. If they were, go ahead and leave a like on this video, subscribe, and share. Somebody might find it helpful as well. I'm going to go talk to some more wonderful people today, but in the meantime, till we meet again, stay blessed.